Good morning, everyone. I would like to reach out and thank everybody for joining us this morning as we're going to be going over these products with Joe Mulligan on the gift giving of life insurance here. My name is Paul Williams. I'm a life sales director over here at IAMS. And before we get started, there's a few things I would like to discuss before getting into this amazing opportunity. And if anybody has any questions, reach out to me anytime. It's 1-800-255-5055. But the first thing I'd like to go over is our new producer builder bonus. This is a great opportunity if you're just starting off with us over here at IAMS. It's for any new producer that has been with us through their first 180 days. And it is a great opportunity, just the way we would like to say thank you for submitting business with us and be able to showcase the opportunity of, we're truly a partnership here. So as you can see on my screen, through the first 100,000 of FIA business submitted with us on the annuity side, goes through the bonuses that you would qualify for, and as you move up, you see the bonuses get bigger, even up to the point of, we'll design a website for you. We'll give you cash in hand or gift cards. But once again, great opportunity there through the first 180 days to really solidify that business and let us help you continue to grow. And another way that we like to, present ourselves as a true partnership over here is through our referral producer bonus program. And, we'll give you $50 for any producer that you send our way. We know that referrals are some of the best people that you can work with, but not only on top of that $50, but you'll get a little piece of the business that they do right. It does not affect their compensation whatsoever. It's just another way we like to say thank you for sending this great producer over here to us. And as you can see, you get a 0.15% on life target. On the index annuity, 0.2%, MIGAs 0.1%, and single premium life 0.075%. And this is paid out, every quarter. I've witnessed Steve, Curtis, and Chris, all of them strike thousands of dollars worth of checks, and it's also a great way to create a little bit of passive income. But also another way of that true partnership is our marketing reimbursement program. We'll pay $100 towards your marketing to use any way that you would like. We do suggest working with one of the programs that we offer here. We have 35 different marketing programs, but if you want to take that money and take it somewhere else, you're more than welcome to. And as you can see on the screen, how this is accumulated, on single premium life, it's $200 for every 100,000 of life premium paid in, $200 for every 10,000 of target premium, and we also pay $100 for every 100,000 of indexed annuity premium. And another way that we really showcase our support for you here is our back office. I know our life team really works around the clock to get business submitted and paid quicker. But we also, we scrub applications, we'll submit on your behalf. We have an underwriter here. She does a fantastic job. So doing pre-screens, if you have somebody that's maybe got a little nicks and dings here and there, we'll definitely shop that around for you to find the best carrier that's going to be able to take this client for you. And our IAMS website is a fantastic resource for all of our agents. I would definitely suggest, be out there daily to use. I mean, there's quote engines. You can request illustrations there. And, we have forms. Our resource sales library is great. I mean, it's got fact finders, it's got full presentations, it's got calculators, everything to really make you successful within this industry is out there on that website, including our EAP solutions. As you can see, we use Luma, Firelight, iPipeline, and Sunfire, which all this stuff, it's single sign-on, so it makes it really easy to use. Once you sign on the first time, you just go back to it. It takes you directly back there. And this is where you can submit your applications electronically They highlight all the boxes for you, so you're not having to wonder, well, should I fill this out or should I fill that out? Everything's done for you. In our creative services department, they really do a fantastic job. These people are, working within the industry day in and day out, so they understand kind of what drives clients your way and what really pops out to them as far as websites go. Because in this day and age, everybody's researching everybody, and really having that web presence is, a huge component of things. And once again, they do a fantastic job. I mean, they'll even design logos for you if you need brochures or flyers, postcards, whatever it is. Reach out to us if you would like more information from our creative department. It's 1-800-255-5055. And right here, our marketing analysis. This is a great way for us as sales directors to get to know you, your business, your goals, what's driving you, and kind of knowing more about you. And what we can do is do, like I said, the marketing analysis, which takes about 30, 45 minutes, and we'll go through, do a deep dive in your business, kind of see what's most important to you, if leads or seminars, web presence. If we need to do a revision to your current website, we can take a look at doing that. But this is a really good way to get on track. And what we like to do is when we do this market analysis is once a quarter or about once every 90 days, let's touch base. Let's see how things are working. Do we need to make any changes? Are we good with how things are operating? And go from there. And our IAMS Wealth Management has been a really good sector of growth for us here at IAMS. I think we started this about 6 years ago. But it's also a great way to really give a holistic approach if we're, working with retirement planning, wealth management, all this stuff, and it really helps make that business more sticky. The more lines that you have with your clients, they're not going to go anywhere else and look around. I mean, we do a fantastic job here. We've even helped, agents, pass their Series 65 and get business placed for them. Our Life and Annuity Academies, great opportunity to speak with your peers within the industry, kind of see what's going on across the country. Unfortunately, we are not having any more this year. We won't get that kicked off until probably late spring of next year. But, I mean, once again, great opportunity to speak with some of the leading producers out there. We'll bring them in. They'll speak, they'll tell you kind of what they're seeing, what trends are going on within the market, go through different sales presentations, and it's just, once again, a really good way to build your business and see what's going on. And our trip to Quebec, this is a 18-month rolling program here. You see the qualification periods. If you would like to know where you currently stand on this trip, reach out to one of your sales directors, or you can reach out to me. We can definitely go over those numbers and see where you're at and where you need to be. Oh, well, that's all I have for today. But as always, like and follow us on Facebook and LinkedIn, as we're constantly posting relevant content that you can take and use for your own website. But from here, I'm going to turn it over to Joe, and he's going to go over these opportunities with us today.
Perfect. Can you hear me, Paul?
Yes, sir. I sure can.
All righty. And if you can see my screen, the baby?
Yes, sir.
All right. Perfect. Well, first of all, Paul, thank you very much for allowing me to come on and talk about MassMutual for a little bit today. I've been with MassMutual for 19 years. I've been in the industry for 40 years. I still got about 7 to 10 to go. But here's what I like about MassMutual. MassMutual is one of the few mutual carriers out there. And IAMS and MassMutual have a special relationship together because you don't often see MassMutual quoted a lot. You don't see it in competitive analysis. We're kind of like the, I think, who was the silent company years ago, but We're a mutual company. We pay dividends. We just announced our dividend rate 2 weeks ago. Our annual dividend interest rate for 2025 is 6.4%. We were 6.1 last year. We were 6.0 for the 3 years before that. And prior to this past 5 years, we haven't been below 6% dividend interest rate going back to 1978. So I will first ask you if you have a pen and paper handy. I want you to simply, I'm going to give you a couple notes that I think are very important to talking about whole life with your clients. There are only 2 moving parts to a whole life product. One is the dividend interest rate that gets paid every year that can go up or down or stay the same. And the only other moving part to your client's illustration is the loan interest rate if your client chooses an adjustable loan rate. We also have a conservative, we have a fixed loan rate. When the clients are taking money out of cash value in the form of a loan, they could take it out either in a fixed loan scenario, which is 6% loan interest rate, or an adjustable loan rate, which right now I believe is 5.2. The important thing to remember about when you're writing applications with MassMutual is the fact that once you pick your loan interest rate, when you're applying with your client on an e-app through iPipeline, once you pick it, your client cannot change it. So we can go into a further discussion about that at another time or individually. I'll be happy to talk you through it. But there's so many products out there today. There's probably 2,000 life insurance carriers out there putting products out. IUL is the, that's probably the most talked about product, good or bad. There's a lot of moving parts to that product. So when you're looking at a whole life policy, number one, you're looking at a guaranteed premium, can't change it. Number two, you're looking at a guaranteed death benefit. Number three, you're looking at a guaranteed cash value. And if I'm looking at an illustration on that, the only thing that can change that illustration 30 years from now is if the dividend rate changes. And I just mentioned to you, we're 6.4, we were 6.1, we were 6.0, 6.0, 6.0, and never below 6.0 going back to 1978. So let's get into it. Gift of a lifetime. This is an important program, especially this time of year, because in my opinion, this program is best received. Your best ears, receptive ears for this are the parents, but also the grandparents of these kids out there. I think after 40 years in the business, I honestly think that most parents are underinsured, and we really don't have enough insurance on the parents. So that's why I think the segue to talk to the grandparents is a phenomenal opportunity here. And I will go into the presentation. I just want to get a couple of these housekeeping things out there. I have children. I have triplets. My kids are 22 years old, 2 girls and a boy. And if I looked at my son's Nintendo and I can't even remember all these game systems that he has, but over 22 years, he's probably spent 10 grand in games in all of these systems. So here's what I would suggest would be a great opening for you to talk to your grandparent clients. Maybe it's an email, maybe it's a phone call where you're going to show them a video that we're going to try and key up here today. But to say, hey, if you like many of my grandparent clients out there, and at the holidays, at the birthdays, at the special occasions, you give your grandkids money, why not consider taking a piece of that money, maybe half of that money, and putting it into a life insurance policy, which will get the kids started with a head start in life. So let's move into it now. All righty. Easier said than done. Trying to move the screen. This is what we call an uh-oh. Oh, here we go. Okay, great opportunities. MassMutual, let me first start before we get into the screen here. We have whole life products. The minimum face amount is $25,000. Minimum face amount for kids or adults is $25,000. Fully underwritten, though it's not guaranteed issue. And our product portfolio, which you'll all get, I'm going to send to Paul after the meeting today. I'm going to send an email that he'll forward to all of you folks with the PowerPoint presentation, the video, and some good talking points. But the products that we have, 8 pay whole life, guaranteed paid up in 8 years, 10 pay whole life, 12 pay whole life, 15 pay whole life, 20 pay whole life, paid up at 65. My favorite, for kids and most people paid up at age 65, and we have paid up at age 100. So the opportunity here is helping children, helping clients give their children a financial head start. Now, as I mentioned a minute ago about, I personally believe that most parents are not necessarily, they don't have the most insurance on themselves. So instead of taking the funding out of their own insurability on themselves, let's put the burden, the financial burden, on the grandparents who are already giving the money to the kids, and the kids are going out buying things with it, spending that money. Forget this increasing your annual FYC in life. I don't know why MassMutual does that, but selling more participating. Participating means we're paying the dividends into the policy. Why whole life insurance on a child? Sales ideas, we're going to look at maybe a case study here, and then most important, underwriting and ownership. So why whole life on a child? Well, children obviously are healthier. They're generally lower premiums. And this third point here is missing our recently approved 8-pay. So we got 8-pay, 10-pay, 12-pay, 15-pay, 20-pay, paid up at 65 and paid up at 100. And I will tell you that many of your grandparents, when you get into the conversation, the ideal ownership of this policy needs to work like this. If you do have a pen and paper handy, I want you to write down the Goodman Triangle. The Goodman Triangle was an IRS case about life insurance. I think it was going back to 1946, where the Goodman Triangle says you should not have 3 separate parties to a life insurance transaction, meaning the insured is the child, the owner, and Benny should be, in a perfect situation, should be the parents. The payor is not considered to be a material partner in the contract, but the payer is grandma or grandpa. What the Goodman Triangle case, it's very easily Googleable. What happened years ago was child insured, mom was the beneficiary, and grandpa was the owner of the policy, because grandpa's paying it, but he wanted to control the money. Maybe he didn't trust his direct line, the mom of the kid or the dad of the kid. So he was the owner of the policy. And when the child died, the death benefit went to the beneficiary, but was deemed a gift. That was a gift from the grandparent to the parent, and thus created a taxable situation. So when you tell grandparents we want to avoid a taxable situation, as we always do with life insurance. So just look that up. That's not a MassMutual thing. That's a life insurance with all companies. The Goodman Triangle, stay away from it. It's also called the Unholy Trinity. Now, I want to talk for a minute here about children are usually healthier. We're going to talk in a minute about putting a rider on the policy, a guaranteed insurability rider, which sets the child up for convertibility down the road. So here it is right here, guaranteed insurability rider. We're allowed to put up to $1 million of extra insurance in the child's contract over the course from age 25 to 46. Every 3 years, they have the opportunity to come back in and increase their policy, their face amount, without any insurability questions. So how often we unfortunately hear of a baby born, and maybe they have, I don't want to start, I don't want to start naming things because that's pretty morbid, but let's just take the juvenile diabetes one as a most common one. Juvenile diabetes for a child is uninsurable with most insurance companies. I know from MassMutual as well. And that child may be uninsured for the rest of his life. I work with somebody right here in my office that has a 23-year-old type 1 diabetic son, can't get coverage for him other than maybe a guaranteed contract out there, but the max is like $25,000. But guaranteed insurability rider says this: every year from the age of 25 through 46, and every 3 years, so 25, 28, 31, so on to age 46, we will allow that insured to increase the face amount up to the limit. The maximum rider is $125,000 in each option. So if you take 125,000 times 8 option periods, that's how we get the $1 million. Periodic or life events that will also, we will allow them to use if they get married or have a child, will allow them to use one of those options for these periodic or life events, available at additional cost. What happens is when that 2-year-old who we insure today becomes 25-year-old, and God forbid they have a medical condition, the parent will say, okay, I want to put the 125,000 on my 25-year-old child right now. The premiums are going to be based on 25 and standard. We don't underwrite, but we do charge them for the premium based on their age. Here's a good point. Dividends, paid up addition. MassMutual pays dividends. Dividends will increase the death benefit. They will increase the cash value. And of course, dividends are not guaranteed. We always have legal mumbo jumbo that says that, but we have never not paid a dividend. It's going back to the first day MassMutual started paying dividends. I don't think we paid dividends in the first 4 years. We're about a 165-year-old company, but we've never not paid a dividend. So let's move along here. Why whole life insurance on a child? A gift that lasts. So we're not going to get in jeopardy with a policy being underfunded and things happening with increasing costs of insurance. So we're going to instill the value of protecting those who matter most. It could protect the future grandchildren and great-grandchildren insofar as whatever that death benefit on the child today is, as they grow and as their policy grows, it will actually grow with them. And then when they pass away, their kids will be the benefactor of those insurance dollars. And it's an early step towards financial security. What I want to say here is I want to bring out many conversations I've had with producers that will say, hey, grandpa doesn't want to buy your traditional whole life policy, which is premiums to 100. Or Joe, I heard you say you like premiums to age 65. I love the ability to keep putting money in a policy. I love it because the back end of whole life is when the juice comes into, it keeps getting bigger and better and bigger, compounding, things like that. But many grandparents will say, well, wait a minute, you're talking to me about me paying the premium. I'll be the payer, and I'm 75 years old. I'm not going to be here for 30 years. So that's why an 8 pay or a 10 pay or a 12 pay, that might make the most sense in that situation. We can say, hey, grandma or grandpa, why don't you buy a smaller limited pay policy, smaller in years? But it's a phenomenal opportunity to bring the grandparents into the situation here. I will tell you that I've heard stories time and time again. The grandparents love this idea because it's frugal and they're already giving money for the kids. Maybe they're gifting money. I talked about holidays and birthdays and all, but if they're maxing out their gifting strategies to their grandkids, maybe they don't have a lot of them, but we're talking about maybe a sizable premium here. This is the best thing. I like this. This wraps this whole program up right now. A cash dividend option. So every single year that MassMutual pays a dividend into this policy, the obvious financial professional decision would be to leave it sit in there, grow the death benefit, grow the cash value, and increase dividends down the road. But imagine this. This is dividends paid become a birthday gift. Here's where the grandparents are going to hear from you about their legacy that they're building through this policy. If you're chronologically adept enough to put the policy date of this policy on the child's birthday. Okay, so I know my clients, I know they have kids, here's their birthday, so I'm doing a little work ahead of time, ahead of the sale. And then when the birthday comes up, let's say December 5th is a birthday coming up of Joey. Every December 5th, after grandpa buys this policy I say grandpa after grandpa pays this policy, every December 5th, MassMutual, when we pay a dividend, Joey's going to get a dividend check. And when he gets that dividend check, he's going to think of grandma, grandpa for the rest of his life. That, folks, right there is the closer. That is a phenomenal opportunity to show a gift that keeps on giving, to show grandma, grandpa, who may be long out of the picture, okay, they're gone, but their legacy lives on in the form of a dividend. I don't think, listen, it would be nice if the dividend went, a check every year went to the birthday boy. But I'd rather, as a financial advisor, I'd rather have the check stay in the policy. But it's still coming every single year. Dividends can be used. They can be used. We could take money out of whole life just like every other product out there on permanent. We can take loans and we could take dividends out. and it's tax-free income. And if I have the ability, I want to show you something really neat. If I get out of this screen in a second. Remind clients that dividends are not guaranteed, but also remind them that we've never not paid a dividend since we started paying them, in my opinion. Obviously, I don't think people on the call today need to hear this. This is the basics of what can you use cash value in any product for: college education, wedding, home purchase. Suggest surrendering paid up in addition. So we could take dividends out for these occasions, and we only want to take dividends out to basis. If we take more dividends out, the question is, are dividends taxable? And the answer is no, because they're considered to be a return of premium. But a dividend can be taxable if the client took out all of their dividends to basis, the amount of money they paid in premiums, and now we're getting still more dividends coming. Those dividends, when they receive them, as opposed to leaving them in the policy, those dividends are taxable to them. So that's when we convert over in whole life, and we actually start taking loans at that point. Obviously, dividend distribution should be made selectively. I'm going to close with this one and try and get into an illustration here. This, you can't really see it, but again, you'll see it when I send the email, and we get this out to your personal emails. But imagine grandma, grandpa writing a letter, and that stays with the policy. Why I bought a policy on you, Johnny. I wanted to make sure you have a head start in life. Maybe you use this to buy a car, to fund some college, pay for books, buy a house. But it's another way. It's a little gimmicky, but it's another way to tie the grandparent to that. And I'm telling you, we literally get hundreds of juvenile sales a year coming in because of this program right here. And most of it are from the grandparents. So imagine the burden when you say to if you know right now, look in your client databases and ask the parents, hey, are your mom or dad still alive? And do they at the holidays, and do they gift money to your kids? Do they give money to your kids? Why not show them this idea? We talked about those two, and I don't need to go into a case study here. So Paul, I want to stop sharing for a second. I think I just did that. Did I?
Yep. Yes, sir.
Okay. Now I want to try and maneuver this and just show you an illustration I ran this morning. So I got to figure out that minimization thing here. Bear with me. If I don't do it in a minute. Well, you know what? I'm not going to do it. I'm going to so that's the finale of my presentation. Here's what I'm going to share with you. And I will send this to you, Paul, so that you can send this out to the folks. I just ran a 10-page. I ran a 10-page illustration, and the premium was $10,000 on a 1-year-old. And what I did in the 10-page, after 10 years, the client would have paid in $100,000. And after I went into that policy and took dividends to basis and loans for college for 4 years, from 17 to 20, and I got $32,000 a year for 4 years. And then at 30, I went in to put a down payment on a house, and I got another $32,000. And then but all the way the premiums are paid. The client's not continuing because this was a 10-pay. And then what I did was I said, let me see income. Let me see tax-free retirement income. So I started turning the faucet on at 65 to 80, and I got 32,000. So if you added up 32,000 times all those years, you're going to see 2 or 3 times what the client paid in premium for that juvenile policy, coming out in tax-free distributions for all different kind of things. And I just did it on a level. I said to the computer, hey, let me see what's the max I could take out. But that's a simple way of doing it. But we don't know in college times, we may need to take out more than 32,000. And that might stop us from taking such a big and robust retirement down the road. So, but my point is, whole life insurance, folks, I'll close with this, it is a great vehicle because of the fact that it's got a lot of flexibility to it. You can put excess money into it. We want to avoid a MEC, and many of those contracts that are 8-pay, 10-pay, 12-pay, that are shorter compressed pays, they will become a MEC if we do overfund them. unless we put an excess term rider on that product, which we can do. We could do it. It gets a little cumbersome in conversation, but we do have the availability. And my point is saying that is that whole life insurance, not as flexible as universal life, but it can be very, very flexible. And I think I say it no better than by saying, folks, there's only two moving parts to whole life, and that's the dividend coming in and the loan rate. And I can get rid of that loan rate moving part by choosing a 6% loan interest rate fixed forever. And now the only moving part I have is the dividend coming in. So, all right, I am done. I'm going to stop my sharing. I think I just gave control back over. Oh, no, I'm giving that. Folks, I'm 63 years old. All right. Paul, am I still on audio?
Yes, you are.
I want to leave you with, I just said I'm 63, so bear with me, but you know, I use Zoom all the time and Teams. I don't use GoTo that much, so forgive my inability to work with the system here. I want to give you something great that I'm doing right now. Look me up on LinkedIn. I'm Joe Mulligan, Cup of Joe, coffee cup there. But I'm going to share with you something so that you can increase your clients that you build every single day. Start doing birthday videos for your clients on LinkedIn. I do 20 birthday videos a day because LinkedIn tells me of my connections, 20 of them every day have a birthday. And I get a ton of connections. But here's what I want to share with you. I just started doing birthday videos for my clients. Instead of the pushing or the boop, I call it a boop, the pre-printed text that says happy birthday. Make them a personalized birthday video, 3 or 4 or 5 seconds. That's it. I've done 5,000 videos in a year and a half, and only 3 people, Paul, have come back to me and told me that they got a birthday video from somebody else. So you want your reps out there on IAMS to have their potential clients, right? Right now they're a connection, but we want to make them a client. Start doing things out of the box that nobody else is doing. I may be 63, but when I found that niche of birthday videos, I'm grabbing on it, and I get 30 to 40%, Paul, of my new relationships coming to me, Joe Mulligan, based on doing the nice thing of a birthday video to that person. You do a birthday video for your connection, I can almost guarantee you more than the dividends at MassMutual here that they're not getting birthday videos from anybody else. And I'd love to do a little bit of dog and pony show on that, Paul, one other day. But for now, I'm going to close it down. I'm going to thank you and IAMS for giving me the ability. I will put together an email that'll have this PowerPoint. It's going to have an illustration showing money coming out. It's going to show the product portfolio. Folks, I will say this. In order for you to write MassMutual, we need to contract you, I'm going to say ahead of sale. So go out, reach out to IAMS to get your MassMutual contract. And then your input of your cases. Unfortunately, MassMutual will not allow them through the IMO channel. So you're going to get your own direct access to MassMutual to put your own cases through iPipeline in our proprietary software that you get when you become a contracted broker with us. Paul, I'll open up. Any questions? Anything in the chat room? Anything that we want to talk about?
No, we actually got kind of a quiet group today. I do have just a few questions for you. So when you were talking about putting, $10,000 a year on a 1-year-old or newborn,
Yep.
Is there a death benefit cap that MassMutual has set?
Great question. And if I had access to my desktop here to maneuver around in Zoom, I would have done it. But so the great question. The answer is you can only insure a juvenile up to 1.25 times what one of the parents has in their own life insurance. So if mom and dad does not have any life insurance, unfortunately, that case is not going to get approved because we believe I believe, I don't know that I believe this, but I think it's a moral decision they made saying, hey, mom or dad need that money spent on them to be insuring them because odds are something's going to happen to them first. So, but we can do up to $1 million on a regular issue. So if mom or dad has $1 million, we can insure the kid for $1 million. Anything higher than that, which we do in high net worth studies, we need to cover, we need a cover letter and things around there. But mom and mom, and it doesn't have to be both. It can be either or, mom or dad, and they can have a group policy. Now they could just have group term at work, and that qualifies. Whatever that face amount is, we'll get the child in for that same face amount.
Okay, fantastic. Yeah, I just didn't know if they, I know some companies out there, they'll cap it at like $500,000 on the death benefit. until after college age or whatnot.
Any other questions? We do. Paul, one thing I'm going to send you is what MassMutual calls the playbook. We're going to send you a playbook to send out to the folks. And that playbook, one of the things I like most about 2024, ever since the pandemic, is we came out with video snippets. If you go to YouTube, you can look up MassMutual and you can find Gift of a Lifetime. You see the video, but I'm going to send it to you. But I love the ability for a producer rep to be able to use a video that's pre-made, professional. It's only a minute to a minute and a half. And you use that and say, hey, whether it's disability or life insurance or funding for college, say, hey, I don't recall us ever having an in-depth conversation about this. Take a look at this quick video, and then let's jump on a Zoom, or let's make an appointment next week and see if you have an interest in talking about it. But that the video kind of takes the, it's like a third-party influence there. The video that they're looking at for a minute and a half, puts it right in their living room, so to speak. And then all you got to do is call them and make the appointment to talk to them about whatever that video is about.
No, fantastic. Well, no other questions have come in, Joe. Thank you again for jumping on with me today. I really like the product. I really like the idea of gifting and being able to, the child receive something from their grandparents, even though grandparents may be gone. I think that's a great idea.
Yep. As well as the, what's often not talked about as much, but that guaranteed insurability right to protect, and this would be more for babies when, if you attack I don't want to say that the wrong way, but, if you're in tune to your clients who just had babies, before the baby gets diagnosed with something, there should always hopefully be a question of, hey, do you want to put some insurance on? It doesn't have to be 10,000 premium, it could be 25,000 minimum. But we can get you covered and put some riders on there that will protect their future insurability down the road.
Yeah, no, fantastic.
All righty.
Well, all right, Joe, man, I really look forward to your email, and I'll get the stuff circulated out to everybody who joined us today. And look forward to hearing from everyone.
Great. Thanks, everybody. Have a good day, good weekend. And I won't be talking to you before, but have a great Thanksgiving.
Thank you. You as well.